Hey everybody, Coach D here, TackleTrading.com. Wanted to respond to Nicholas Moore's post in the clubhouse, just talking about the chart pattern, looking at what's going on with the S&P, and pretty interesting, market conditions. Nothing crazy going on, but if we back this out here, let's kind of look at this in the big picture. The market is basically in a support resistance zone. And last week, you'll recall, I made the video about that alligator pattern expanding out, possibly leading to a reversal. Well, that's actually kind of what that really segued into was a possible kiss goodbye pattern. Let me go grab the drawing tool here, pull that down. Okay, trying to get some good perspective on those candlesticks. So here's that alligator pattern, and the market did end up breaking down, rallying up, kind of a kiss goodbye setup, and it's now in this inside consolidation pattern down in here. And it could, we're seeing a little bit of a downtrend right through here, just a small downward channel. Now, that could just be a little, down 1, 2, 3, 4, 5 kind of correction, known support zone. This can easily take off to the upside. We're currently in an inside consolidation here, so that's really that inside consolidation. If we, back it out to like a weekly time frame, you're going to see dojis. And anytime you see, slowing momentum, inside consolidation, that's when you'll see, if you change time frames, candlesticks dropping down into, smaller candlesticks. And so if we, let's back out here to the weekly chart, that's exactly what you see. That, we had a little bit of an expansion, but now we're just overall inside consolidation. And inside consolidation can lead to breaks to the upside. Inside consolidation can lead to breaks to the downside. It is nothing more than a symmetrical triangle or a pennant type pattern that technically can break either way. I mean, in theory, it's supposed to break with the trend about 70% of the time, and that it's going to reverse, around 30% of the time, according to John Murphy, the great chart pattern guru. And that's an interesting kind of situation to look at. Now, if I look at the broad market here, I kind of see a big old rising wedge, which is a slowing momentum pattern, which boom, resistance, boom, resistance. It's just not, the market's slowing down. That's pretty obvious. So we're still in an uptrend. Again, you back it out into that daily time frame, and you could look at this as maybe a double bottom, kind of boom, boom, and then if it violates that upward channel, we could be off to the races. There was some decent job report data, et cetera, but the market valuations I still think are way overvalued. That support resistance zone, this little upward trend zone, that's all still valid. Now let's break this down into an intraday chart, and you might be able to see some of that inside consolidation. Here we see, okay, the low pattern. So that's kind of the bottom side of it, and then the top side still coming down. And it looks like it right now might be favoring break to the upside. But again, cautiously bullish to neutral, always watching out for that first little drop in the market, because that, the market can reverse relatively quickly if you look at it and you understand that the old saying that the bulls take the stairs and the bears take the elevator or jump out the window. So, here's the stairs kind of working hard to get to those highs, and all of a sudden, boom, one day it gives up what it took weeks to form. That's very, very common. Same thing happens over and over with the market. It'll work, and then drop, relatively quickly on giving up some of the gains. That's why we use trailing stops and always try to lock in gains when we have those positions. So there you have it, your S&P broad market perspective. And really, to kind of put it back to what Nicholas Moore said, interesting, not sure what to make of it. Well, that, to be quite frank, the market really isn't quite sure what to make of it. It's not sure whether it's coming or going. It's inside consolidation, which we talked about, leads to dojis. And many of you have heard that dojis are oftentimes referred to as indecision. Well, the market is not sure whether it's going to break out, and if it does, people will respond. If it breaks down, people will react. If you can predict the future, awesome. I can't. I've been trying for years. And what I've learned is that, hey, patterns like this, inside consolidation, can break either way, up or down. The key isn't to try to predict. The key is to be Johnny on the spot and react quickly. If it breaks out, go ahead and buy. Buy with confidence. If it breaks down, go ahead and stop out or sell short. And it's, just that simple. You don't have to predict. You have to react, taking action. Inaction will rob you blind. Coach D, TackleTrading.com.